As the economy teeters on the edge, many investors are saying now is the right time to buy in. We've got to buy the dip because the Federal Reserve is going to change its tune, and that means we want to get ahead of all that. At the same time, the jobs numbers are looking fantastic. What do we have to worry about? Well, in this video today, I'm going to show you both sides of the equation, give you what you need to know so that you have the information. In fact, the first thing I want to look at is consumer non-confidence. What's been happening over the last while? Let me tell you, if you're an egg farmer, you're probably in a good business right now. That's a hint. The second thing is the jobs telling the story. Now, we're looking at some information I'll give you there that really expands beyond what the mainstream is willing to tell you. So if you stick around, I'm going to show you that. You're going to know the real deal. And the third thing is energy's big moves. I'll give you what investors should be looking ahead to, but also as an individual, unfortunately, to tell you that you're probably going to have to pay more, at least for the foreseeable future, because of this one thing. Let's begin. Here we have it. I wanted to show you right now as we look towards monetary policy. Monetary policy is essentially the central banks pumping out cash, and they have suggested that increasing interest rates, tightening the financial conditions, actually makes the wealth gap in between the rich and the poor worse. So they say when they bring interest rates down to zero, that allows people to buy homes. Therefore, we need to do that, and that would actually create prosperity. They completely ignore, I can't believe it, completely ignore the whole point of the boom in the first place was created by the easy money. And so as long as we ignore that information, well then, low interest rates means that we can pay that extremely huge amount of money over a long period of time. Okay? They literally say that here in this report from the Federal Reserve. They say because of the amortization process, you're going to pay that over 25, 30 years, then it doesn't really matter because, hey, interest rates are low. And as long as they stay low for that period, everyone's going to do okay. And this is about the inflationary factor. Let me talk about eggs. Now, they give some prices in here, and you might go to the store and see nothing like this at all. But I'm just trying to show you that egg prices have gone up. Now, they talk about different reasons why that's the case, and it might be because of the avian flu that's going around, and it might be because of price gouging, and it might be some variety of other factors. But that's just one aspect, because if you point at eggs and you can say, no, it's because of the avian flu, that's it. Well, what about all the other stuff that had gone up and never came down? I am sure that you can post in the comments below the things that went up. 2020, they went crazy. 2021, did they go down? No. What about 2022 and now into 2023? Did they go down? A lot of people would say, no, actually, that's not what happened. And maybe we're well off the peak, perhaps, but has it come down to where it was back in 2020? I think the answer is no. In many, many respects. For services as well, oh my goodness. Just take a look at some of the things that people are paying for, and it's quite extreme. But you have to look at the consumer and what they're doing. MasterCard earnings top expectations amid remarkably resilient spending. Well, doesn't it really show us a little bit more detail if we kind of analyze why MasterCard usage is up? Or is that because they just love to use their credit card because they like to get the points? Well, I think you have to look at the personal savings rate that has declined to levels we basically haven't seen before. Savings drop down all the way, and certainly you will see people using their credit cards. And if you're going to ignore the fact that, buy now, pay later services are just, there's surge in demand, well then you're not going to really see the whole picture. But you can look at the mainstream and what they want to tell you. And certainly people using their credit card is very good for companies like MasterCard and Visa. But are they going to be delinquent on it? If they're paying it's 19% interest right now, which is crazy. 19%. Are they all going to be paying off their balance? Probably not. Let's look at the next aspect here. Don't let your personal information fall into the wrong hands. With private internet access, you can surf the web with confidence knowing that your data is safe and secure. Private internet access is the world's most transparent VPN provider with over 30 million downloads. They understand the importance of keeping your data secure and your identity private online. That's why they offer unbreakable VPN security, which makes them the most transparent and privacy-focused VPN available. They never record or store user data, and their no-logs policy has been proven multiple times in court. They have a world-class next-gen server infrastructure covering over 83 countries and every US state. Private internet access hides your IP address and encrypts your internet connection. This way, it shields your digital life from the eyes of your internet service provider, network administrators, and government censors. Private internet access also comes with loads of entertainment benefits. This VPN works with all major streaming services, so you can access more content than ever before anywhere in the world. Their strict no-logs policy ensures that your data is never stored or shared with anyone. With customizable privacy features, you can tailor your protection to fit your specific needs. But what sets them apart is their instant secure data protection. With just one click, you can protect yourself and your data from hackers and snoopers. And with their top-rated customer service, you can trust that private internet access has your back 24/7. You can use one private internet access subscription to protect up to 10 devices at the same time. Private internet access is available for all platforms: Windows, macOS, Android, Linux, iOS, and many more. Signing up for private internet access is risk-free. There's a 30-day money-back guarantee. By using the link in my description, you can protect your online privacy with PIA VPN and get 83% off plus 4 extra months for free. I wanted to show you here because you can see what's going on in the job situation. Interestingly, look at the initial jobless claims. That has come down quite a bit. And that really, sets off a different tone in what's happening. Because suddenly that was picking up all the way through from September. That was going up and up and up, much higher. And then things changed most recently. And so it starts to beg the question, is the job situation getting better or worse? What about this here? Looking at the initial jobless claims and then showing us the continuing jobless claims. And the continuing has risen, whereas the initial jobless claims has declined. So we're going to monitor that because it's kind of at an inflection point right here. These two have diverged quite a bit in the last year. But what I'm highlighting is that we have some, let's just say, fluctuations in these numbers. I noticed that California, I'm not sure if I pulled that up, California was kind of the odd one out that had a lot of, a lot of that was coming up for California. And this just breaks it down because it's not necessarily just one type of claim or the other. On the top of the list, the bulk of this comes from state claims. So there are other things like the emergency claims that were happening from 2020 and on, many different things, but overwhelmingly it's state claims. So if they start to get rid of those or they reduce them or whatever, that's the one to watch. You can look at all the other stuff, a lot of that has gone away, but watch the state claims if you really want to understand the detail, okay? This gives us an idea of what's happening with jobs as well, because if you look at it, they really highlight it right away, saying that throughout 2020, what happened? Well, 2.6 million US workers have gone missing. They are not there anymore. A lot of people simply retired. A lot of people, maybe they were sick, maybe their spouse was sick, and they simply said, okay, I'm not going to work anymore. A lot of things happened over that period. It was a couple of years. The classic line is, 2020 gave me a chance to reflect, and they're going to find themselves or what have you. Like, a lot of people just changed completely what they were doing. But that millions of jobs never really got filled, and you see the participation rate that is at a very low level compared to where we were before. And so it's just giving us a little look at this from all these different angles. Really good stuff, okay? Because when we just look at unemployment U3 rate, I mean, come on, we're not getting the story. Okay, looking at this. Under the hood of the Q4 GDP report, which, by the way, you might have seen, showing that there is growth. Yes, the economy is growing. It is not stagnating. Don't worry. Stocks love it. Stocks love it. But there's just one thing. Just one thing that you might not have seen. Look at this. A broad measure of the US economic demand, real final sales to private domestic purchasers, which excludes trade, inventories, and government spending, increased at a 0.2% rate in the last quarter of 2022. Essentially, what I wanted to highlight was the fact that when you remove the fact that inventories rose, so that's kind of like, think of it, inventory being, okay, it's stored capital, all right? Inventory being stored capital had gone up because people weren't buying the stuff. That was the number one contributor to why the GDP actually grew somewhat. Otherwise, there would actually have been a slowdown. So this is the truth. This is the real data. This is the real data. Now, does the market care about that? Maybe not, but that's the reality. Okay, it's up to you what you want to do with it. Let's look briefly at energy here. Double whammy of energy and insurance costs to trigger insolvencies, according to PwC. And I found it interesting, of course, because we've been dealing with this for a while. Energy bills and credit insurance expected to rise in April. Number of insolvencies has jumped in the last year. Doesn't surprise me. Why? A lot of businesses, they couldn't even open their doors anymore because the costs were rising. This is, for Europe especially, but other places as well. They just said, it's not worth it. It's not worth it just to keep the oven on in my little cafe here. No, I got to close down. And so people got laid off and, real stagnation as a result. Italy's Meloni prepares trip to Libya to boost energy supplies. So also at the same time, the prime minister had already visited Algeria earlier this week. So what are they doing? They're saying, okay, we're not going to get it from Russia. Let's go get our energy from Africa. Big deal, okay? This is big, this is huge. And we know also that Africa is a very big partner to China. And, in the case of the US, Africa's kind of this ground where China has really, really taken over. Europe wants their piece, of course, being positioned geographically nearby. And that, I think, could spell a little trouble down the road. That's a different story. The point is they are putting more money into this type of energy. Gas, oil, crude oil is important, still going to be important. However, $1 trillion green investment matches fossil fuels for the first time. World spent $1.1 trillion transitioning to clean power in 2022. It's the same amount spent producing oil and gas. Very important, because if the governments are putting all of this cash into these things, they're pouring in the trillions of dollars into green energy, we know that that's where the money's going to be. If there's a recession, if there's a depression, it doesn't seem to matter. So remember that as you invest, where is the biggest of all big money, that's your tax dollars, going to, so you can make the right investment choices. I hope this information was valid. I hope that it brought something to you that you can use. All I ask is that you hit that subscribe button down below so that tomorrow you're going to get some real good intel. I'll bring it to you tomorrow. Take care.